Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 20th of March 2021, and we're publishing our gold and silver weekly update for the week ending the 19th of March. We also briefly look at political events and economic reports, which could shape what happens to the US dollar and therefore precious metal prices. So let's take a look. Gold rose $17 last week from $1,728 to $1,745, having hit a high of $1,755 and a low of $1,719, a rise of 1%. In sterling terms, gold finished the week at £1,259, that's up £18 or 1.4%, and in euros it closed at €1,466, that's up €21 or 1.4%. Silver rose 32 cents from $25.95 to $26.27, having hit a high of $26.65 and a low of $25.80, a rise of 1.2%. Managing to hold comfortably above the $26 figure, but struggling to get that 27. In sterling terms, silver closed at £18.98. That's up 34 pence. And in euros, it closed at 22.05 euros. That's up 0.34 euros. The gold to silver ratio fell ever so slightly, from 66.6 to 1 to 66.4 to 1. Bitcoin fell almost $1,000 last week, and its price is currently $59,019, though it had reached an all-time high again at 61,755. The Dow Jones closed on Friday at 32,627, down 234 points on the day and down 161 points on the week. The S&P 500 closed at 3,913, down 2 points on the day and down 30 points on the week, while the Nasdaq Composite closed at 13,215, up actually 99 points on the day, but down 104 points on the week. Brent crude, looking at oils, closed at $64.53, down $4.69 on the week, and WTI crude closed at $61.42, down $4.19 on the week. Many of our listeners have heard us argue, time and time again, that a reasonable or acceptable price for oil is at or around the $50 to $60 mark. Anything above that figure, in our view, is exploitation. The dollar index stands at 91.91. That's up 0.24 on the week. Now, our price trading range for last week stated, quote, "Therefore, we're not altering our trading range for gold this coming week and see it trading between $1,600 and $1,800, with $1,550 to $1,800 as outliers, and silver we suspect may perform a little better, and we are hiring our range by 50 cents, so we can see it normally trading between $25 to $27, with $24 to $28 as outliers for this coming week," unquote. Well, gold opened mixed, but then gained a little higher momentum, rising to its week's peak on Thursday, falling back again as yields rose, and the dollar strengthened but closed slightly in a rising position. The truth is that gold moved within a relatively tight margin, having said all of that, of just $36, but in fairness remained quite firm despite 10-year Treasury yields increasing nearly 9 basis points, which would normally seriously dampen gold's enthusiasm. Support is seen at the 10-day moving average of $1,725 and resistance at the 50-day moving average of $1,794. Both short-term and medium-term momentum are positive, and the MACD is pointing to higher prices. The one banking aspect to note from last week was that the Fed did not extend its relaxation of capital requirements on the banks. But that said, Jerome Powell, the chair of the Fed also stated that interest rates would not rise in 2021, 2022, and probably not until well into 2023. We have to point out that the 10-year treasuries do not believe him, as indicated by their rise in yield. Now, the fact that he is forecasting a GDP rate of 6.5% by the end of the year, this compares with previous quotes of around 4%, is more than extremely optimistic, and some even believe it's just wishful thinking. So, despite that, his comments have appeared to be rather dovish, and this is why, to some extent, precious metal prices have risen, albeit slightly, in spite of higher yields and a stronger dollar. Silver prices rose at the start of the week, dipped Tuesday and Wednesday, recovered, and rose strongly on Thursday, fell back, and then, like gold, rose towards the end of Friday. The trading range was between $25.80 and $26.65, so again only 85 cents, which is comparatively small, especially when compared with moves earlier in the year and certainly dramatic moves last year between highs and lows. One aspect that many investors, or those perhaps deciding whether to invest, seem to forget about with silver, and it does have a bearing, is that when yields rise, the price of storage costs become more pertinent and frankly discouraging. Technically, support is seen at $25, with very strong support at varying stages down to $24. We are beginning to hear some analysts now talking about $22 silver, and admitting that should that break, then we could see quite a significant fall in its price. For the first time, probably in over a year, someone's even mentioned $14 silver. We don't hold to that, we hasten to add before anyone accuses us of it. But, having open minds, we should at least observe what others are saying. To the upside, $28 offers considerable resistance, but if that is surpassed, bullish. Commentators and analysts believe there will be a slow but determinable path to $30. Now, in our video published on Thursday entitled Gold and Silver Rises After FOMC Statement, Then Falls Back, which we produce a link below, we highlighted the various mixed economic data published this last week, with disappointing jobless claims on Thursday particularly standing out. Now, taking a look at what we're expecting this week, on Monday we have the existing home sales for February. Tuesday, current account deficit for quarter 4 and new home sales for February. Wednesday, durable goods orders, core capital goods orders, both for February, and the market manufacturing PMI preliminaries and the market services PMI preliminaries, both for March. On Thursday, we have, as always, the weekly jobless claims report and gross domestic product for quarter 4. And then on Friday, personal income, consumer spending, core inflation, and trading goods all for February, and the consumer sentiment index for March. So Wednesday through Friday are certainly noteworthy and could have some impact on the price of gold and silver, depending on how well they fall. Now, politically, there have been some angry exchanges between China and the United States at their talks in Alaska, and we've also seen President Biden fall while boarding Air Force One, and former President Trump has an outbreak of COVID-19 at Mar-a-Lago. Of course, there's much more going on in the world, particularly financially, but at perhaps the more political, less intense level, Pakistan's Prime Minister Imran Khan is self-isolating after testing positive for COVID, and no international fans will be permitted at the Tokyo Olympics and Paralympics in the summer because of the pandemic. And France and Poland have also imposed new lockdown measures. None of that particularly augurs well for an opening up of the global economy. So where does this leave us for gold and silver prices this coming week? Well, the stimulus program involving $1.9 trillion has been passed and is in the process of being implemented and handed out. The only next major injection US citizens can perhaps look forward to is a potential major infrastructure spend plan. And of course tax rises for those earning over $400,000. The price of gold, frankly, will be determined by yields, increase or decrease, and dollar strength or weakness. And any uptick, when it does occur, in the industrial demand for silver. So our usual targets for gold and silver more recently are holding well, and we see no reason why either should not move comfortably. In the case of gold, within the 1650 to 1800 range, with 1600 and 1850 as outliers, and silver broadly operating within $25 to $27, with 24 to 28 as outliers. Now tomorrow we shall be publishing episode 16 of Bitcoin versus Gold and Silver, so please do not miss it. What are your thoughts? Please do share them. As I often say, we do read them. We don't always answer them due to time constraints, but we do most certainly read them. Thank you for listening. If you haven't done so, please subscribe to our channel. And finally, we wish you a safe, enjoyable weekend. And as always, a prosperous week ahead. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.